California Association of Realtors Market Minute. Thanks for coming back to the most up-to-date, to the point, informative channel based upon data so you can make informed decisions and reach your real estate goals. Existing home prices dropped in May from the previous year, 3.4%. That's showing the increase in rates in March and April. That's when they actually opened escrow. So we will see, since the rates went up further in April and May, how much further sales are going to drop in June and July. We shall see. So new home sales increased in May, 10.7%, and that's likely home shoppers actually projecting the rates they're going to go up, and so they close escrow on those new developments earlier for the low rates. Adjustable rate mortgage applications jumped to over 10% last week. The previous year, in 2021, adjustable rate mortgages were only at 1%. So that's 10 times growth than what it was. So an adjustable rate mortgage is when you have a low fixed mortgage for 5 or 10 years. And at that point, it adjusts with the market, as opposed to a 30-year fixed. At a 30-year fixed, the rate's higher than at the beginning than adjustable rate mortgages. So that allows buyers to enter up to a property, more opportunity. Okay. And purchase applications rose 8% from last week, likely because even though the rates were a lot higher last week, likely because they're getting adjustable rates. And so rents climbed in May, 15.5% comparison to the previous year. That's a huge jump in rents. However, it's actually the growth of rent is actually slowing, because in January it was 17.3% from the previous January. So the University of Michigan Consumer Index dropped 58.4% to 41.4. So these are consumers. Consumers don't have a positive outlook. 4 out of 5 consumers expect bad times. So these are consumers, not necessarily home buyers, but home buyers are having to deal with inflation as well. So sellers, for the last 12 years, you've had continual price growth. So you have a lot of equity. Your home is worth a lot more than it was before. It doesn't look like it's going to be going up much more this year. My projections were 9% for the whole year. I think that's already over. For the next 3-4 years, it's going to be a 3 or 4% growth. So your property value is not going to be going up. If you're waiting for the prices to go up, it's pretty much not going. It's going to happen gradually, not much. Property values are not going to be going up much. So if you're looking to move, that's up to you. But don't expect you to get a much better price later on if you wait. Buyers, here's 2 considerations for buyers based upon feedback that I've gotten. Rents are going to increase. And as a result, mortgage payments are going to increase. That's for sure. Mortgage payments aren't going to decrease while rents are increasing. So some buyers say, I'm going to wait for the interest rates to increase further. They're going to go up further, and the prices are going to come down. That's logical thinking, and I used to believe with that. But then you look at the actual facts, as in this chart here. In this chart here, it's showing previous times when the rates increased. When the rates increased, prices went up, and there were less home sales and more inventory, more months of inventory, more properties on the market. And that's what's happening now. That's what we've seen in the recent data. Less sales, more months inventory, not prices coming down. Asking prices coming down, possibly. Some say, I'm going to wait for the rates to drop because the rates are too high right now. And then when the rates drop, then I'll get into the market and purchase property. However, when the rates drop, what's going to happen is the prices are going to go up because people can qualify for more. So here's a possible scenario that can happen for you. Forget about the price that I put. Just think about the scenario. Let's just say you purchase a property with a 6% mortgage at $800,000. It could be $500,000 or $1.2 million, whatever it is the amount, but 6.6%. If the rates drop, let's say in a year or 2 years to 5%, you can refinance, get the lower payment, and have $100,000 worth of equity because the property value is going to go up. Doesn't that make sense? Let me know. Let me know what your thoughts are. I'll say it again. You buy a property now with a 6% interest rate. Wait for the rates to drop. When the rates drop, the prices are going to go up. You're going to have a property valued at $100,000 more than you bought it, and you get a lower payment. Let me know what you think about that. Please click like, comment, subscribe, or hit the bell if you see value in this content. Once again, let me know about the analysis. I'll see you in the next video.